to make sense of what people say. Okay, so this is a very flexible qualitative research methods. As I will show you later, namely I look at public consultation papers and people's submissions and to see what people's submission influence the policy the most. So this is the first discourse analysis. The second is an event study on the stock price reaction to the policy shocks for the adopters and non-adopters of ESG reporting. So in other words, if we want to look at the impact of a policy on a specific outcome, usually we just run a regression. Actually, there's endogeneity problem. Okay? And then, however, the event study is based on the efficient market hypothesis. It's so far the simple but powerful and clean test to see whether the policy has outcome. So we adopt these two. So I'll explain this later, but these are the research methodology. Okay, Hong Kong experience. Yes, a beautiful Hong Kong. Okay, so when I talk about Hong Kong, I firstly introduce what is the 2015 rule, okay, the substantive legal requirement. And then I'll explain to you how this policy is formulated. And then I will analyze the texts. Okay, so I start with this 2015 ESG reporting requirement and overview. In December, okay, last year December, Hong Kong Stock Exchange amend its listing rule, okay, to add an appendix to the listing rule. This appendix is titled ESG reporting guideline, and then require that all listed companies comply with this on a comply and explain basis starting from 2016, which means this year's report must contain the prescribed ESG reporting. Okay, so we will only see the report next March. Okay, on the 2016 financial year. And there are two main areas: environmental and social. You may ask, where is the governance aspect? Actually, Hong Kong listing rule already have a corporate governance code. Okay, so the governance aspect is regulated separately. So these, although its name is called ESG, but it's mainly on environmental and social aspects. And then, for both environmental and social aspects, there are two levels of disclosure. There are comply or explain items. These items you must disclose or explain. Or there are other items. This is recommended for disclosure. And for no matter environmental and social, what is mandatory is you must have narrative general disclosure on all items. So for example, on your green gas, the emissions, you have to have a general narrative disclosure on your company's this priority policy with compliance with relevant law. So this is required for every item. And more important is this, key KPIs, key performance indicators. So every KPIs under environmental are comply or explain, it's mandatory. And so far, all KPIs under social are recommended disclosure. This may reflect the Hong Kong's position that maybe the environmental issue is more pressing. So we put environmental as a priority. Okay, so environmental are all mandatory. Socials are so far recommended. This slide shows you the substantive KPIs. You may find that this is a real exercise. What is, for example, environmental is for comply or explain. It's divided into three aspects: emissions, use of resources, and natural resources. And then the detailed quantified information you need to disclose includes type of emissions, emissions data, green gas emissions in total and in intensity, total hazardous waste, non-hazardous waste, the total water bill, electricity bills, the water consumption, and then, so basically, as you can see, these things are real. Okay, so in other words, if your business is wide and complex, that really takes some efforts to produce. So these are, and then even total packaging material. Okay, total packaging materials used for finished goods. So anyway, I just want to show you that these are real. Okay, and then for the social, these are recommended disclosure. But as I mentioned earlier, they are recommended means in the future they are very likely to be enhanced to. I'll explain. So as you can see, total workforce by gender, employment type, employee turnover, work-related injuries, fatalities, health, training hours, number of suppliers by geographical region. Yes, so as you can see, these are the KPIs. So what really takes time is you need to come up with this figure. If you come up with untrue statement, other people can sue you. So that's the company's choice from obligations from 2016.
Is the GRI standard being used?
They are referenced. They're referenced. Actually, the Hong Kong Stock Exchange provides a toolkit. Okay, I'll show you. Yeah. So in other words, but definitely these are the key substantive requirements. Okay. So starting from next year, we will have a lot of information to assess companies, which is good for researchers. Other than these key KPIs, there are requirements that the ESG report must cover the same period as your annual report, which is reasonable, and then must be issued no later than 3 months after the publication of annual report. So there's a timeline. You must do this. And in order to make sure that the management does seriously take ESG into account, it says who is accountable. Board is accountable, takes overall responsibility for reporting. And then in the Director Business Review section, which is usually the MD&A section, the law said, the listing rule said, directors must include a discussion of companies' environmental policies and performance, compliance with relevant laws, and account of companies' key stakeholders and how you deal with them. So in other words, make sure that directors do not just delegate all this reporting to a nobody, and then so make sure directors must physically address these concerns. And it set out several reporting principles: materiality, quantitative balance, consistency. Although these wording sounds a little bit different from the GRI 6 principles, but I checked, they roughly covers similar aspects. So, okay, and then so this is a substantive requirement. And the next I'm going to introduce to you the policy making process, which is very interesting. So why I listed these dates here? Because these dates later on I will use them to do event study. Okay, because these are the key policy shocks. Okay, so let's start with, because this rule finally came out in December, right? So we go back to 2010 or 11. Firstly, you need to know that by 2010, the voluntary adoption of ESG reporting in Hong Kong listed firms is very low. Okay, the government has conducted this survey, which shows that only about 16% main board issuers are doing this voluntarily. Okay, so the government feels there's a press pull to encourage them to start reporting. And then, so what the government did is, during the May to July 2011, the Hong Kong Exchange held 15 free seminars, workshops, okay, prepare food, everybody comes, and then why they gather everybody? Because the government wants to educate the market on something that Hong Kong Stock Exchange proposed to add to the listing rule, which is called a 2011 ESG reporting guidelines. And then through this, it's like set the atmosphere for the possible regulation. And then after this intensive training, okay, there are statistical figures on how many companies, so over 800 issuers attended this.
Did the government hold the workshops, or did the Hong Kong
Stock Exchange?
Okay.
So the stock exchange hold the workshops. And then after this training, okay, the stock exchange posted every training materials, toolkits, and then on its website. And so shortly after this, as you can see, only about 4 months, 4 months after this, the Hong Kong Stock Exchange published a consultation paper on this ESG reporting guideline. So in other words, this is a consultation paper. Say this is the guideline. We want to append it to listing rule, and these guidelines are voluntary. Okay, so it's not compulsory, but we want to encourage you to start reporting. And then, so do you agree with this? And then do you agree with specific questions? So in this first one, actually, the Hong Kong Stock Exchange identified over 60 questions. So 60 questions, and then ask the respondent to address whether you agree with this one, if not, why. So it's done on a very transparent manner. Okay, and then it allows like 4 months for the public to respond. And then after collecting the respondents, and then on August 31, 2012, the Hong Kong Stock Exchange issued a press release saying, this is our consultation paper conclusions. And then on the same day, we decide that this voluntary guideline be appended to listing. So this is a confirmation date of we call it best recommended practice date. And then after 2002, actually now it comes to already 2015. So during this period, actually 3 years have passed. Okay, in the world many things changed. Okay, other countries have already, also making move in this aspect. So the government want to see, the stock exchange want to see whether the voluntary adoption rate enhances. Okay, but the result is still not satisfactory. Although there are improvement. This is by a Bloomberg study. Okay, they randomly pick 330 from large capitalization, small capitalization. So they find that the voluntary adoption rate is still below 50.
Are those just heightened?
Yes.
Are those just Hong Kong issues heightened, or are those issuers from the world? The Bloomberg study.
They randomly select 330. This may include the international issuers listed in Hong Kong, but I need to check that specific list.
Okay, so quite possibly that's a study just of issuers, not Hong Kong issuers, issuers.
Yeah, that's all the main board issuers. Yeah, the main board issue.
In Hong Kong?
In Hong Kong.
Okay, so that's a Bloomberg study of Hong Kong issuers.
No. If you are a Canadian company, you listed in Hong Kong, you may be also included in this, as long as you are listed in Hong Kong.
Okay, so it's a Hong Kong-based study.
Yeah, Hong Kong-based issuers.
Thank you.
So these are the only two more exact figure that we can find. Okay, but so in other words, it doesn't seem that voluntary carrot approach may not work. Okay, so that is why on July 17th, the second consultation paper comes out. Second consultation paper basically shows what I showed you just now. These KPIs, some are comply or explain, some are recommended approach. And then this time I think the question is there are over 20 questions because the consensus, the divergence has been narrowed. So they ask the society to respond whether you agree with elevating to comply or explain, and then whether you have specific opinions on each. So this time actually gives them 3 months to respond, and then by the end of December 21, the Hong Kong Stock Exchange say issue another press release. We finally decide to append it to listing rule, starting from 2016. Okay, so basically this is the flow. This is the flow. And the whole process are highly transparent. Okay, I'm showing you these are the websites where the Hong Kong Stock Exchange published consultation papers, submission by respondent, and toolkits, and resource hyperlinks. So I just want to show you one. For example, I'm showing you this. Respondents by submissions, respondents with identity. I think I closed. This is the link. As you can see, responses to consultation paper, all these who responded, Citibank, CLP Holdings, these are from the listed companies. Okay, Standard Chartered, Swire, and then there are some companies. When you make submissions, you must be real name, but you can choose to let the stock exchange hide your name. Okay, when publishing, and also professional bodies. Okay, Hong Kong, different associations, Institute of Directors, Canadian Chamber of Commerce in Hong Kong. Maybe just type. Yeah. Anyway, if you click, you see their detailed responses. Yeah. So and then the response to each questions. Okay. So these are the political communications which I examine. So I read all the 203. Okay. And then anyway, yeah. And then from the market participants, as you can see, the large BlackRock, BMO. The TIAA, these are the big investors. And there are many from governmental, civic, So anyway, so it's quite transparent. Okay, so, and I focus on the last one, okay, the last public consultation. How many people respond? So basically, it's like 203 submissions, but they are semi-identical, finally 186. And then as you can see, how much is from listed company, market participants, listed firms, law firms, accounting firms, retails, and others. Okay, so basically I read all these, and then I highlighted the key words that they highlight, the key areas of debates. And then I use this to do the discourse analysis. So I not only looked at what they say, but also who said it. Because different people may have different stance. If I'm the listed company, of course I want to say something, I'm against this because I'm the regulated. If I'm the investor, of course I want to advocate something, right? So different persons have their biases. So, and then I look at what do they have in common, the frequency of the things they mentioned. Okay, so I'll just highlight to you that there are several interesting key aspects of key issues of debates. The first is whether ESG reporting should be voluntary or mandatory. Because we know that the 2015 one is trying to elevate to the complying or explain level. Whether people agree with that. The good news is 96% respondents, they agree. And for those who don't agree, uniformly they are listed companies because they bear the cost, right? This is quite understandable. For example, China Petroleum, we know that's almost the largest company in China. Okay, say why they don't agree? They say the cost burden associated with ESG reporting will affect the future willingness of companies to list in Hong Kong. It's like intimidating the Hong Kong Stock Exchange. Okay, large companies like us will not consider you. Hong Kong Ferry is a local listed company, small and medium size. It says it will be a burden to cover all aspects, especially for SMEs. Okay, this sounds legitimate. And an anonymous company said for low polluters, they will incur cost without bring benefit. And Another company says, for issuers operating multiple jurisdictions, comply or explain is very burdensome. And another local, the large ones is they say they try to lobby for more flexible implementation. They say we can prepare yearly data, but can we report every 2 years? Okay, and then another company says, how about flexible implementation for the initial 2 years? Maybe you give us a grace period. Okay, so these are the common justifications I cited. Yes.
Dr. Liu, on the third last one, just a question. The companies that are listed in Hong Kong,
Yeah.
do they have to report on all of their global operations? So China Petroleum needs to report all of their ESG.
That's a very good question. That's also a key debatable issue. Okay, in that consultation paper. So finally, the Hong Kong Stock Exchange says your coverage, okay, your group coverage, you need to clearly specify your coverage. If you don't want to include in some countries, you just let the readers know which things are included. Okay, so yeah, provide a basis for comparison. Okay, and then these are the company's comments. Let's look at what are the supporting views. There are some other companies which support this. They say Hong Kong Stock Exchange should be an Asian pioneer in ESG reporting, and this is Caldas, California, that big pension fund, right? It says Hong Kong Stock Exchange, this initiative is a positive step for market efficiency and transparency. Highly commend. Okay, and then the TIAA, another big pension fund, it says fair market require material ESG reporting. This initiative aligns Hong Kong Stock Exchange with the global peers and ensures that the same level of diligence that investors, intermediaries, issuers bring to other markets have appropriate disciplined context in Hong Kong. So in other words, this is kind of level the playing ground kind of thinking. Okay, and then a Hong Kong-based private family office, although this looks intensive, that I just explained, it says this not only brings benefits to large issuers, but also to small and medium-sized issuers. Their argument is increased ESG disclosure will be a catalyst for increased dialogue between investors and investee companies. We would like to encourage Hong Kong Exchange not to disregard SMEs because they may not be attractive to large institutional investors. Throughout the world, we have seen there are leaders among SMEs that have shown genuine interest towards ESG reporting, and they can enhance their competitiveness and reputation. So basically, this